Hey everyone, welcome to my channel, where I record my journey towards FIRE, or financial independence, retire early. This uncle only started the investment journey at 40 years old, and after 5 years, there are some encouraging results. Despite of the many crises that happened over the same period, which includes financial crisis and the COVID crisis. Okay, let's get into today's video. I had earlier posted a video on the performance of the hospitality REITs in 2022, and it has been an amazing year for the performance metrics of hospitality REITs. The hospitality sector had the highest median increase in distribution per unit or DPU for the year 2022, at 32%. The next best sector was healthcare, at only 1.6% increase. This means that hospitality outperformed the next best sector by 30 percentage points. The link to the video is at the top right corner. Take a look if you are interested to find out more. In this video, I will be sharing about the performance of my portfolio of hospitality REITs for Q1 of 2023, which the REITs just announced a couple of weeks ago. As always, this uncle will also be sharing my holdings for each of these REITs, because everything I say is 100% based on my real portfolio. In this video, I will be using a new template, which I hope will be more informative and useful for you. So let me quickly go through it. As I go through the performance of each hospitality REIT, the name of the REITs that I hold and its stock quote is shown at the top. This figure shows the value of my current holdings. This figure shows the average price change in 2023 so far. For ARA US Hospitality Trust, this is rather flat at -1.4%, and this figure shows the dividend yield on an annualized basis, which is quite high at 9.4%. So because I have about $24,000 invested in ARA US Hospitality Trust, I would currently expect to receive dividends of $2,300 a year. In terms of the performance matrices, I will be presenting the net property income or NPI of the REIT, which shows how much the REIT earns after deducting expenses including interest expense, and also the revenue per available room or RevPAR, which shows how much the REIT is earning for every room it has available for rent. I am only showing the year-on-year changes for these matrices, because hospitality sector is very seasonal. It is not correct to compare Q4 with Q1 because Q4 is the peak travel season along with Christmas, while Q1 is the traditionally lull period for hospitality. For ARA US Hospitality Trust, their hotels have performed really well, with the matrices up between 19% to 24%. While its gearing is among the highest for hospitality REITs at around 40%, it has also fixed the highest proportion of debt at 80%, so I do not expect major problems with the interest expense of the REIT. The next REIT is CapitaLand Ascott Trust. The share price has so far went nowhere, with a 1% capital appreciation this year. It pays a dividend of 6.3% yield, which is attractive given the quality of its brand name in the lodging business, and the diversification of its assets around the world in 15 countries. What this uncle also likes about CapitaLand Ascott Trust is that more than half of its assets pays stable income. This consists of master leases and longer stay properties such as serviced residences and student accommodation. At the same time, slightly less than half of its assets are more growth in nature such as management contracts of hotels and serviced residences, which will benefit as tourism recovers. It does not report its net property income, but its revenue per available room has improved by 90% from the previous year, which is very encouraging indeed. Currently, I expect to receive $1,200 a year as dividends from CapitaLand Ascott Trust. Next is CDL Hospitality Trust, which has gone down 4% so far this year. It pays a dividend yield of 6.0%. As with other REITs and shares that I hold for the long term, the key is to do dollar cost averaging over time. It is fine when the share price is not doing as well. In fact, I am happy because it means I can buy more of these quality shares at lower prices. This is what I intend to do for many of my hospitality REITs, including CDL Hospitality Trust, as its NPI and revenue per available room continue to improve as tourists return to Singapore, Europe and Australia, where CDL Hospitality Trust has its hotels. I have no doubt that they will be able to sustain their dividends, even as interest rates continue to exert downward pressure on returns. This uncle also likes CDL Hospitality Trust for its sponsor, CDL Limited, which I recently increased my holdings in, is a major hospitality player holding Millennium Hotels and Resorts Group. And CDL Limited continued to hold a substantial portion of CDL Hospitality Trust, showing alignment of interest. I would expect to receive a dividend of $1,450 from CDL Hospitality Trust this year. Far East Hospitality Trust also had a flat year-to-date performance in terms of its share price. It provides a dividend yield of 5.6%. The NPI and revenue per available room have continued to show impressive improvements, and this hasn't even taken into account the potential tourists from China who are slowly, but surely returning to this part of the world. As mentioned in my video on which REITs to hold when interest rates are higher for longer, Far East Hospitality Trust has one of the lowest gearing among all the Singapore REITs at 32%, which is a good point. However, it has fixed only 47% of the interest rates of its debt, so I will be monitoring its interest expenses going forward to see how it affects the distribution. Currently, Far East Hospitality Trust is expected to pay me $510 a year. Finally, Frasers Hospitality Trust is a holding that I started investing in not too long ago. Its underlying property performance was not as good previously, but has recently started to do better. Its share price went up by 6.7% so far this year, and provides a dividend yield of 5.3%. The main bulk of its properties is located in Australia, and you can see that its revenue per available room has gone up by a whopping 270%. As this is still a relatively new investment for me, I am looking forward to gradually build up my understanding of its underlying properties, and hope to share more about Frasers Hospitality Trust in a later video. Now, just to present this uncle's total holdings in Hospitality REITs portfolio. In total, I have $78,168 in the 5 hospitality REITs. The portfolio was flat at about -1.5% year to date, and a dividend yield of 7.1%. So overall, I am still in the black. Overall, I expect to receive $5,600 of dividends a year. Okay, that's a wrap. Thanks everyone for watching. I hope you find the video useful. Again, if you are interested in building wealth and achieving financial success, please consider subscribing, and continue to look out for my latest videos, so that we can learn from each other in our FIRE journey. See you next time.